This summer, my wife and I had the opportunity to go to Europe, and she was pleasantly surprised to find that $1 equaled €1. And this was a big change from just about a year ago. A euro cost $1.25. And so she found that her dollar bought a lot more than it had previously. This was good news for her and good news for shopkeepers in Europe, maybe not so good news for me. But, except when traveling, most people don't tend to think about currency exchange rates. But given that an estimated 90% of all transactions globally have the dollar on at least one side of that transaction, there are important implications for the global economy and for investors. Now, currencies typically only move a fraction of a percent on a daily basis. And so to see the dollar appreciate almost 20% against a basket of foreign currencies, as it has in the past year, is a remarkable move, and it bears unpacking a little bit. So what's the cause of the appreciation in the dollar? So one thing is the dollar is considered to be a reserve currency. So in times of global crisis, which we've certainly had our fair share of recently with inflation, with the slowing growth rates, the war on Ukraine, foreign investors often seek out the safe haven of the dollar, so they sell their foreign currencies and buy the US dollar. That causes the dollar to appreciate. A second reason that you all alluded to earlier is the Federal Reserve has been faster and more aggressive in increasing US interest rates than have global banks elsewhere. Those higher rates are attractive to investors overseas. Again, they sell their foreign currency, buy dollars in order to invest in the higher rates. That also pushes up the value of the currency. And a third related reason would be the inflation in energy costs, particularly for importers. Europe is in the news in this area for sure with the war on Ukraine, because they buy energy in dollars. Those energy goods cost more than they do relative to the US, where we have mostly energy independence at this point. Now, is the dollar's strength a good thing or a bad thing? Well, like so many things, it depends. For one thing, it's about the only investment year to date that's showing a gain, an appreciation. And now most people don't invest directly in currencies, and we wouldn't really suggest speculating in currency prices. But again, there are important implications for stock investors. Now, companies located overseas who have foreign sales, they're getting a benefit from the strength of the dollar in their weaker currency when they translate their sales back into that currency. Burberry, the UK luxury goods producer, was in the news just last week saying it's adding over $200 million in its net revenue this year just due to the currency movement. Now, the opposite is true for US companies that have large sales internationally. Nike and Microsoft are a couple of big names recently in the news having the opposite impact. When they translate their sales back into the US, the stronger dollar hurts their revenues. And so this is an important thing to keep in mind, because a lot of people forget in the S&P 500, over 30% of the sales of those companies come from overseas. In the tech sector specifically, it's more like 60%. So we want to look in coming quarters to see the impact that currency is going to have on their profits. The biggest implication is for our investors who own international stocks, as we do for clients. Just as the companies take a hit when they translate their dollars back, investors take a hit when the dollar is strengthened and they translate those foreign returns into the US. So to give you an example, year to date, a broad basket of global stocks is down about 9% in the foreign currency. But when you translate that to your US dollars, the return is negative 18%. So that's a pretty big impact. Now, given that fact and the fact that US stocks have outperformed international stocks for quite a few years, some investors ask, what's the value of even investing internationally? Well, one, these things come in ebbs and flows. We believe international stocks will again have their day. One of the reasons is, as John alluded to earlier, the valuations on international stocks are much lower, and that makes their future return expectations higher. The other reason, though, is this currency impact. So just as trees don't grow to the sky, the dollar has appreciated. It may continue to appreciate more, but at some point it will probably come back closer to historical levels. And when that happens, investing internationally for U.S. investors, that'll be a tailwind instead of the headwind it's been the last few years.